I think I am confusing to you. So let me very clear. There is two kind of markets. First is primary markets, second is share secondary market. Hello everyone, so today we'll be talking about the stock market. So what is the basically an stock market, uh, and what is like how the share, what is the shares, how the share is being created. So basically we will be talking with the example of business. So just suppose you have a business, you own a business which have like valuation, or you can say uh, you might have valuation kind of thing. I think you can understand valuation. Like suppose you have valuation of 1 lakh rupees. Okay, so now you're supposing, or you are feeling like we are growing and we need extra fund to grow much and expand with different cities, or you can say different states or different countries. So what happens, you have talked about with your relatives, friends, and families, like you have told them like we are growing now, we need some extra money. If they provide, then you do not need any external money. Okay, you will be getting your own money and you will be growing. But at a certain point of like growth, you need extra money, more money, which I think generally family can't afford, or family can't provide, or any relatives. So in that scenario, basically what happens, companies raises the fund. So you will also be raising the fund. So for example, you have raised the 1 lakh rupees, another 1 lakh rupees, like for growing your company. So earlier your company's valuation was 1 lakh rupees. After raising the fund of 1 lakh rupees, so what will be the your actual valuation of the company? So that will be 2 lakh rupees. So you have invested 1 lakh rupees. So while raising the fund, you will be promising to the persons, or to them persons or public, like whoever will be investing, I will be providing the share about sorry, share about of that money, particular money. Like suppose anyone invest, suppose directly anyone is investing 50,000 rupees in your company, then you have raised 1 lakh rupees percentage, 1 lakh rupees fund you have raised, and one of the guy of among investors is ready to invest 50,000, and rest of the guy is ready to invest 10,000, 5,000, 12,000, whatever they have. So let's suppose with the two scenario, like you have 1 lakh rupees you have invested, and one another guy is coming with 50,000, and rest of the people is investing the 50,000. We will be not talking about the count of that people. We generally consider the three segments. One is investing 50,000, you have invested 1 lakh rupees, and another like group of people is investing the 50,000. So what will be happen, you after calculating the whole money, your company's valuation will be 100%. So in that 100%, you have invested 1 lakh rupees and overall value is 2 lakh rupees. So the company means you will be owning, because you have 50% of shares, you will be owning that company. And the share of like you own, that will be 50%. And the person who has invested will be getting the 25% of shares, and the rest of the 25% shares will be divided among in between the peoples who have invested the rest of the 50,000. So that is very simple about the shares. Now how the share is been like you can say created. So just suppose you have raised like 1 lakh rupees. While raising the fund, we generally means companies generally follow the SEBI's guideline rules. Like they first release their IPOs and their FPOs. Then generally they comes with the stocks and shares. So just suppose you are uh, when you are like initial buyer of that particular of shares, then you will be buying the IPO. Okay, now suppose one that person who we were talking about the 50,000 shares he was ready to buy with the 50,000 rupees of amount. Now in future, if your company is continuously growing, now in future he try to sell their stocks. Now the prices of the 50,000 will be also have been increased. Now when he will sell, so someone is ready to buy, someone should be ready to buy, because that the company will not provide the money, because they have kind of agreement through the IPO, you can say. You will be selling the different persons your shares. That is where exactly comes the share market. So we are talking about the share market, I think I am confusing to you. So let me very clear. There is two kind of markets. First is primary markets, second is share secondary market. So primary market, in that primary market where the generally IPO is released, as I have told you, first initial purchasing of that particular shares, that is comes in under the IPO section. So the once you have purchases the share, now you have some problem or you need that money, you are trying to sell that particular shares to someone. So that share will be sold in the secondary market. That is exactly the which is exactly the share market. So there, one will sell the shares to other, and other will to share the someone else. So in that way, like share market works. I hope you have got the understanding.